Hey guys, name's Ryan Farman here, and I'm with CFA Spokane Society. We also have Sean Mahoney on the phone as well, and he's part of the CFA Society board. We're going to be the ones kind of helping the research challenge this year. I'm sure you've probably talked to your professors and kind of somewhat have a kind of a knowledge of what the challenge will be. I don't want to jump in too early, knowing it's just kind of 4 o'clock, but just wanted to make a quick introduction, and we'll probably wait for another 3 or 4 minutes, see if some more people kind of come in, and then I'll kick it off. And we're gracious enough to have Travis on the phone from Idaho Strategic Resources that will be leading most of the call. So take a couple more minutes, and I'll let you know when we get started.
Thanks for the intro, Ryan. Real quick, I guess while we're waiting for folks, I'm actually sitting in my truck right now. I kind of had a whirlwind day. I had to take my dog to the emergency vet down here at Washington State. So she's in surgery and I'm sitting in my truck. So I apologize for not having the most professional office space today, but we'll make do.
All good, yeah. Did you have slides that you wanted to go over? If you wanted, I could maybe, if you email those to me, I can share the screen and then kind of flip through those if that would make
Oh,
your
I
life
should
easier.
I should be good. Yeah, I've got
Yeah,
slides, but I should be fine.
perfect.
Ryan, who are the universities? I see Whitworth, University of Idaho. Who else we got?
Gonzaga is participating as well, but I'm not sure. Let me find out. Yeah, we're participating.
Okay.
Mm-hmm.
Let's give it one more minute, then I'll kind of kick it off here. Good. Well, yeah. Thanks everyone for jumping into the Zoom meeting, and this is kind of the company presentation for the Spokane CFA Research Challenge this year. And really, what I'll kind of go over the format of the whole research challenge, and then I'll make an introduction for Travis here, and then we can kind of get going. But as most of you are aware, the research challenge really consists of two main parts. One is going to be a 10-page written sell-side kind of analysis of Idaho strategic resources. And that can also be accompanied with 10 pages of kind of indexes as well there. And we're going to have those papers that are going to be due at midnight on January 30th. So didn't want to make them due on January 31st, Saturday for you guys. So it'll be due on Friday there. So that is half of the grade of the competition. And then the other half of the grade is going to be a 10-minute live presentation in front of 3FA CFAs. And then following that 10-minute presentation of kind of your findings on the analysis of the subject company, there'll be 10 minutes of Q&A from that CFA panel. So very similar to previous years. You can get online and go to like CFA Spokane Society. You can see previous years presentations. Happy to shoot to anyone previous winning papers as well, just so you can kind of read through those and get good examples of how other students have done that in the past. So that's kind of the main portion of the competition. Today's the company presentation. So Travis has been gracious enough to give us some time. And what he's going to do is going to go through probably about 45, 50-minute kind of presentation on what a typical investor relations presentation would be, kind of going over the business, the outlook moving forward, go through some of the financials, whatnot. And at the end of that, we'll open up to all the students. And I might just throw a couple questions in there too. But you can ask Travis kind of any questions if you've done some research on kind of the company that will help you kind of form that analysis and anything that you want to ask there. So that will be today. You have 2 weeks after today for teams to get signed up through the CFA Institute website. I passed along the links to the professors, so they have those, but feel free to email me too, and I'll shoot those over to you. Teams need to be between 3 and 5 students, so no more, no less than that. If there's any kind of circumstances, we can always sub out one team member for another. Just let me know and I can pass that along and get those kind of updated. So the other piece as well is in 2 weeks, if you guys want, you can submit 5 additional kind of written questions. I'll kind of roll those up and we'll shoot them over to Travis and he'll kind of give you some answers after you've done some more analysis after this presentation of anything that you're kind of looking for there. Any questions on that? There's no stupid questions because it's all kind of a brand new competition for you guys. So
Hey, Ryan, can we record this?
Yes, this is going to be recorded. And then I will post this video online, and then you guys can go back and look at it. I know some universities haven't got the full team, or some people can't make it. So yeah, this will be. I'll post it onto YouTube for everyone to watch through the CFA Spokane profile there. Good. If there's no other questions, Travis Swallow, who is the director of stakeholder relations and corporate development at Idaho Strategic Resources, is gracious enough to give us some time. And he's going to give us a kind of company presentation, and then we'll open up to Q&A. For this year, I know we've done Idaho Strategic Resources about 3 or 4 years ago as a challenge, but we thought for the CFA board that it's a super interesting time just with the price of gold, with the kind of rare earth minerals that they're doing, and tariffs, that will be a really interesting kind of analysis this year. So if there's no other questions, I'll kick it over to Travis.
Cool. Yeah, thanks, Ryan. Thanks for the intro. I'll share a presentation. I've been with Idaho Strategic for about 4 years now, and I believe I joined the company in December of 21. I think right when you guys were doing the final presentations for this about 4 years ago. So it's kind of cool to see it happening again. Let's see. Can you guys all see the screen well here?
Yeah, we can.
Okay, perfect. Okay, so I don't know how much of a heads up you guys all had on Idaho Strategic, but we're headquartered in Coeur d'Alene, Idaho. Ryan gave you the 30,000 gold. We also have what's the Earth Elements Land Pack in the central part of the state. Idaho is really taking an Idaho-based approach from the very beginning. We take I-90 east from Coeur d'Alene and get to our New Jersey mill, which is where we process the gold up here from the Golden Chest mine, which is our one operation that's currently producing gold. So right now we truck the ore that we produce from the Golden Chest mine down to the New Jersey mill where it's processed, and then we produce a gold concentrate. We don't actually produce the physical gold bar itself. And we sell the 2-ton super sacks of gold concentrate to a smelter in South Korea right now. So it gets trucked over to Seattle, put on a boat. The barge takes it to South Korea, and we get paid from the South Koreans. So it's quite an interesting supply chain that we navigate. We also have some gold exploration assets across the state that we'll go over, and of course our rare earth element projects we added in about 2020, kind of right at the onset of COVID. And the thought process behind that from our management team was, we were at a point with COVID that you couldn't even get masks from China. And when you couldn't get masks from China, our management team recognized real quickly that we weren't going to be able to get rare earth elements from China and critical minerals. And they had been tracking the critical minerals industry, how reliant the U.S. had become on not only on foreign countries, but you could say on foreign adversaries for these minerals that are essential to the green energy transition, to national defense technology. And so they were very opportunistic. And kind of right at the onset of COVID, when nobody was doing anything, we sent our geologists down to central Idaho to stake these 3 rare earth element projects, which now make up the largest rare earth element land package in the U.S. So for the 10,000 foot overview of the company, we are listed on the New York Stock Exchange. Idaho Strategic has been public since about 1996, but it was traded over the counter, and it was under the name New Jersey Mining Company. So December of 2021, we changed names from New Jersey Mining Company to Idaho Strategic. We did a reverse stock split of 14-for-1, uplisted onto the New York Stock Exchange, and that kind of coincided with not only the company's entry into critical minerals and rare earth elements, but also our shift from being an unprofitable gold developer, still building that operation at the Golden Chest mine, into a profitable gold producer. So the timing there from our management team was really good, and that we kind of hit the ground running. On the NYSE, official uplisting was March of 2022. We actually rang the opening bell of the New York Stock Exchange from underground. So that was one of my first big tasks on the job, was figuring out how to live stream from underground to the floor of the New York Stock Exchange to ring the opening bell. And fortunately that went off well for us. But like I said, we're a profitable domestic gold producer. You'll probably find throughout your research that there aren't many companies like us really in the American mining industry. What you'll find is a lot of exploration stage companies where they've got exploration assets and they're raising money, diluting shareholders to drill holes and to explore for gold or whatever mineral or commodity that they're after. But there are very few companies that actually take a project from that exploration stage into development, through the lengthy development process to build the mill, build the mine, and then ultimately get to production and cash flow positive. And our company took the standpoint that, rather than continue to dilute shareholders and drill holes and try to build up this big gold resource, basically prove out a bunch of ounces in the ground, what we wanted to do is prove out just enough to where we're comfortable getting to production, and then put all the capital we had into getting into production and getting to cash flow positive. And that was really our way of minimizing dilution. Right now, the company's got an extremely strong balance sheet. Most of all of our debt is all just equipment debt. And we kind of manage the business from an owner's mindset. And when you're in kind of cyclical industry like many commodities are, what we've always looked at is when things go south, when the price of the commodity that you're producing goes against you, and say, you're selling gold for less than you can produce it for, you really want to make sure you're not over levered. And unfortunately, in this industry, that tends to happen, where companies get over levered in the good times, and then the bad times come, and they always do come, and those companies end up losing all of their assets to the bank. And so we've made it a point to keep a very conservative and strong balance sheet and really build on that in the good times. And I mentioned we did a reverse split in order to uplist, to get our share price high enough to get onto the New York Stock Exchange, but we've kept that low total share count. Right now, we've got about 15.6 million shares outstanding. And I touched on our business plan. It's really production-backed exploration. So it's putting the Golden Chest mine into production, getting to cash flow, and then reinvesting that cash flow in organic growth. We're also optimized for discovery, we say. We drilled about 10,000 meters in 2024. We plan for north of 25,000 meters in 2025. And I believe through 3 quarters, we're probably on track to do closer to 30,000 meters of drilling. And so this is drilling that's largely all funded out of cash flow from our gold operations. And what we do is we kind of increase our drill budget as the price of gold is increasing. So as we're making more money, we're reinvesting more money in growth. And I'll go over some of our exploration projects as we go through the deck. We've got drilling planned not only at the Golden Chest mine, there's a lot of opportunity for expansion there, kind of near our existing underground infrastructure. So those are areas where if you do make a discovery, you could put that area into production fairly quickly because you're utilizing infrastructure that's already in place. We also have what we call the Murray Gold Belt, which is kind of the district scale, broader land package that the Golden Chest mine is a part of. But the Golden Chest mine sits on about 220 acres, and we've got 20,000 acres of exploration property right around the town of Murray and the Golden Chest mine. We're doing a lot of drill target identification on the rare earth element side of the business right now. So the rare earth element projects are all very early stage. When we staked those projects, really they hadn't been worked since about the 50s and 60s when they were initially discovered by the United States Geological Survey. But back in those days, we didn't really have a need or a use for rare earth elements. And so it was more of an academic exercise, not necessarily anybody doing exploration to build a resource to put these mines into production one day. So we're going back and kind of starting from square one and doing all the groundwork that you have to do to build a sustainable operation down there. At the Golden Chest mine, 2025 has seen a lot of investment in infrastructure that we'll talk about as we go through the deck, but the big one is we're building a new mill on site. So I mentioned we produce gold at the Golden Chest mine, but currently we truck our ore about 45 minutes to what we call the New Jersey mill. So it's an off-site mill. And now that the company is at a point where it's very profitable, the first thing we wanted to do is build a new milling facility on site. And so we're building what we refer to as the Murray Mill on site at the Golden Chest mine, which we expect just between haulage costs and a couple of efficiencies that we'll get into, we'll save about $1.3 million annually by moving that milling on site. And then real quick, we've got this "we live here" philosophy, which really is quite as simple as it sounds. Everybody that works in our company lives about an hour from where they work. So from an environmental standpoint, from a safety standpoint, really just from a quality of life standpoint, there are a lot of benefits to Idaho Strategic by having an operation where all of our employees are living. These are guys that are, their other option would be to go work at a mine in the middle of Nevada or the middle of Alaska, where they're working 20 days on and 10 days off. And these are typically younger guys with young families. And so when you ship those guys out to Nevada or Alaska, they're missing 2/3 of their kids' lives as they're growing up. And so we get a lot of really talented, really good employees simply because of the fact that they get to live near their operation and grow up with their families. Quick overview, third quarter performance. We actually just released these numbers yesterday after the market closed. So I'm still getting familiar with them, but I'll let you guys do a lot of the analysis on the numbers. I'll just kind of do this brief overview. Revenue of 11 million for the quarter, net income of just under 3 million. But what I really want to call your guys' attention to as you're evaluating Idaho Strategic is really this operational performance box. And one of the things to pay attention to is our all-in sustaining cost per ounce. And so when you evaluate a mining company, all-in sustaining cost per ounce is not a GAAP number. And so companies can kind of manipulate that in many different ways. For us, all-in sustaining costs it's truly all of the costs that go into operating the business, basically divided by the number of ounces you produce. And so even if we're doing, say, an exploration drilling program on our rare earth elements projects, the cost of that program goes into our all-in sustaining cost to produce an ounce of gold at the Golden Chest. Even though spending that money on that drill program had nothing to do with producing that ounce of gold, that's just how our company chooses to account for it as the most accurate way. But we'll also always report this adjusted all-in sustaining cost number, which you could see is about $1,000 per ounce less. And so that adjusted all-in sustaining cost per ounce number is basically taking what we report as all-in sustaining costs and backing out all of what we call discretionary exploration. So all the exploration that we spend down at our rare earth elements project, but also, other gold exploration projects outside the Golden Chest mine, where that money isn't necessarily helping us produce more gold. The current run rate for the company is we'll produce about 3,000 ounces of gold a quarter. We've been growing production every year, but we do expect kind of a flat year for 2025 compared to 2024. And that's because we're in the process of building that new milling facility, which will allow us to increase production. So I'll dive in a bit to our gold project specifically. And I guess when I talk about the gold projects or any project, if I say any terms that are industry terms that, you guys may not know what I'm talking about, just interrupt and ask the question. I'll try to explain everything as I go, but I may miss something. So this is a few photos and an overview of the Golden Chest mine. It's actually Idaho's largest active gold mine. There are only 2 primary gold mines in the state of Idaho. Idaho itself is more known for phosphate production down in southeastern Idaho and silver production up north in the Silver Valley, Kellogg-Wallace area. But we are one of 2 gold mines, and we're the largest. And so 2024 produced about 12,000 ounces of gold. 2025 will be a slight increase, but relatively flat. The average grade that we produced in 2024 was 9.67 grams per ton. That was relatively close to what we were actually in Q3 of this year. But you'll see the average grade fluctuate. And what we see at the Golden Chest mine is typically grade is increasing at depth, but we're not always mining at the lowest level that we could be mining at. Sometimes we have to mine the upper area of the mine. We call them stopes. A stope is basically a tunnel along the vein. So when we're mining the upper country stopes, we're typically in that 8 gram per ton range. And then in those lower stopes, you're say 10 to 11 grams per ton. So we try to keep about a 9.5 gram per ton average, but depending on mine cycles and things, you can't always be perfect with that, especially with a smaller operation like we have at the Golden Chest. So you'll see that average grade number fluctuate. It doesn't mean anything is going great or going wrong with the company. It's just kind of the nature of the rock in the ground. But we are a modern vertically integrated underground operation. And so what I mean by that is we're a ramp mine, and you can see in this top left photo, we're a rubber tired mine. Everything is ramp accessed. So you're basically going in what looks like a big railroad tunnel and you're corkscrewing down underground. A lot of the mines that say were started in the early 1900s still going today were all shaft mines. And so those are the mines that you probably traditionally think about where you basically are getting in an elevator and just going straight down. And the difficulty with the shaft mine is that you have to get all your equipment up and down that elevator. You have to get all of your ore up and down that elevator, and you have to get all of your people up and down that elevator. And so if you have the ability to build a ramp mine like we have, there are a lot of benefits, efficiencies of mining, and also a lot of safety benefits to just being able to, walk in and out of the mine, so to speak. But the Golden Chest mine, it's our only producing asset. It serves as our production base, our source of cash flow, and that's what we use to fund all of the broader exploration that we do. And the Golden Chest mine, by no means, is like fully explored itself. So like I said, it sits on about 220 acres. We've got 20,000 acres in the district. But even on 200 acres, we're finding new potential. So Golden Chest, if you can all see my cursor, what we call the Idaho stopes in here. And what this photo is you can see the satellite image of the mine, but we've also overlaid our underground mine workings on top of it so you can get an idea of the scale and what I'm talking about. So this is the main access ramp. We go down, this is a corkscrew down underground. And so what you're doing is you're corkscrewing down parallel to the vein that you want to mine. And so when the golden chest was initially built, the target was this Idaho vein, which is represented by this first dash line. And so we corkscrewed down parallel to it. We mined out, and then you stope along it. So we're stoping north-south along the vein. What we discovered in 2023 was this H vein that was just to the west of it, about 50 meters away. And so when we discovered the H vein, it's actually a higher grade vein. And so we shifted production from the Idaho vein. You could see all of these, we call them attack ramps. So attack ramps going from the Idaho vein out to the H vein. And then you could see us stoping north and south along this H vein. And so all the production in 2024 was from the H vein. All the production in 2025 is going to be from the H vein, and it has been so far. And then we've got a couple areas I've called out here in red. We've got the Red Star area that we just discovered at the end of 2024. And we've got this Paymaster area that's actually, it's another north-south vein that looks like an extension of this Idaho and H vein to the south of our current workings. And I've posted some of our drill highlights. You can see high-grade drilling or high-grade drill results on both the Paymaster area and the Red Star area. And so these are areas that when the new mill's on site at the mine, you could see us have a scenario where we're still producing in the H vein, but we're also producing from the Paymaster and maybe also getting ore from the Red Star. And so that'll really allow the company to start production growth. So this is what I'm talking about when I talk about the Golden Chest mine sits on 220 acres, but we've got 20,000 acres in this district. So this is a satellite image of what we call the Murray Gold Belt. This I didn't put our claim outline on here, like the outline of our property specifically. Basically, we control all the mineral rights in this entire area that you see. And the Golden Chest mine sits down here in the bottom of the photo. And that's the 220 acres where we're currently producing the 12,000 ounces of gold a year. And every prospect that we have named on here is a historic, say, 1890s era gold mine. And so if you read back through our press releases, actually in July, it was June or July this summer, we purchased the northern half of this Murray Gold Belt district. So up until this year, our company owned these southern prospects. And so we purchased from another local company. They're quite a bit bigger. If you've been around mining in the area, you definitely know 130. 2025, we drilled here in the southern end of the district. And so what happens when you drill a prospect is you're poking drill holes in the ground, you're getting core samples, and then you have to have your geologist go, foot by foot and look at rock that you pulled out of the ground. And we've got 7 geologists on staff, but it still takes us a while. And so we won't have drill results from this program probably until early next year. Because once they look at the core, they sample the areas they think that they might find gold in, and then they send those off to a lab where they do a fire assay to basically tell you exactly how much gold is in the rock there. And so exploration at times can kind of be like a hurry up and wait scenario where you do a bunch of drilling when the weather's good during the summer, and then you're kind of hanging out all winter waiting for those results to come in. So we're sort of in that hanging out and waiting phase, but it's one of those things where if any one of these prospects starts looking like it could become the next Golden Chest mine, well, then it's a really good thing we're building the new milling facility on site, because then that milling facility can be the processing facility for this entire Murray Gold Belt district as we develop it out and discover more deposits here. This is an overview of our mill transition. So if you're driving from Coeur d'Alene east along I-90, you'll probably see our New Jersey milling facility. You can see the Coeur d'Alene River here. It sits right along the river. The highway is just off the photo here. And so we've currently truck our ore about 45 minutes to the mill. This mill actually is very high tech. In 2014, it won a Pollution Prevention Champion Award from the Idaho Department of Environmental Quality. And that's because we utilize something called a paste tailings system. And so any of you guys familiar with mining will know one of the biggest environmental permitting aspects or challenges with a mining operation is what you do with your waste. And so a lot of companies, the waste from their mill, we call them tailings, it's pumped out into a facility. It's pumped out as a liquid. And so what we do is we actually filter our tailings and press all the water out of it, and then we pump it out more like a sandy paste material. It does cost a bit more for us to do it that way, but again, we live here. We're the people that swim in the Coeur d'Alene River or swim in the Coeur d'Alene Lake that's fed by the Coeur d'Alene River. We want to make sure we do things right, and if that means spending a little more to make sure our tailings are as benign as possible, that's what we're going to do. And so that technology that we've employed and really that our mine engineers pioneered here at the New Jersey mill, we're actually going to do the exact same thing and implement that up at the Murray mill on site at the Golden Chest. And so these are photos from this year. We started construction. The building's actually now complete, and we're starting to outfit it with equipment. But even at this stage, it looks fairly finished, but it'll probably take us until probably Q1, Q2 of 2027 before this facility is operational and we're using it. So it is, again, kind of one of those hurry up and wait things. Everything kind of takes longer than you want in this industry, but it's the nature of it. Eastern Star, this is south of Coeur d'Alene. There's a little town called Elk City nearby, but really this project's kind of out in the middle of nowhere. But it's very similar to the Golden Chest mine. It's about 220 acres of private land, about 1,400 acres total. And this is a project the company's owned since 2014. But the company at the time was focused on putting the Golden Chest mine into production. They didn't have that production base to reinvest the cash flow into exploration yet. So this project's always sat on our balance sheet, and we've always been excited about it, but we've never had the funds to drill it. Until 2025, we drilled our first kind of phase 1 program. So just about 2,000 meters of drilling. It's really just enough to test some of those historic prospects that we feel like have good gold results and that past sampling and trenching have shown us have good gold. So again, we're still waiting on assays from that, but those are being logged now. So probably in the next month or two, we'll have results on that drill program. But it's another one that's on private land, so permitting is relatively easy. We could put that project into production kind of in short order if things start coming together on it. I'll shift now into our rare earth elements projects. Usually I stop after the gold. I'll allow for questions, but I think right now I'll just monologue through the whole thing. This is an image of the Idaho rare earth belt. So this zoom in on the town of Salmon. You can see here in the image that hill in the north, Diamond Creek in the southern end. And this Idaho rare earth element belt was originally discovered in the 50s and 60s. And at that time, our U.S. government was actually looking for nuclear-related fuels. So they were looking for thorium and uranium. And what they discovered here in Idaho was this vast deposit of thorium. And whenever you have thorium, you typically have a mineral called monazite, and monazite always has thorium and rare earth elements. And so they kind of discovered all the rare earth elements here in Idaho by accident. But they documented them at the time. They didn't really have a use for them at the time, so it was more of an academic project. But nowadays, with the advent of electric vehicles and a lot of the national defense technology like the F-35 fighter jet, Virginia-class submarines that rely on rare earth elements to operate, there are a lot of uses for it. And I think, as all of you have seen in the news, our country is now searching far and wide anywhere across the globe besides China and Russia, trying to find sources for rare earth elements. So we are the largest rare earth element landholder in the United States, and we're also control what is now the largest concentration of thorium resources in the United States at our Lemhi Pass project. So it has a bit of both rare earth elements and thorium. So we'll look at the Lemhi Pass project first. This is our most prospective rare earth element project we have. We call it like our flagship rare earth element project. And Lemhi Pass it's again located at the southern end of the Idaho rare earth element belt. It's about 12,000 acres in size. What we discovered at Lemhi Pass that hadn't been discovered in the past was a type of rare earth element deposit called a carbonatite. And the reason that's important is because carbonatites are the largest lode source of rare earth elements globally. And so what I mean by that is it's the largest hard rock source for rare earths. So it's not rare earths that are coming from, like some in situ mining method where they're pumping, acid into the ground and getting rare earth elements out. It's not coming from mineral sands mining where they're basically processing large volume of sand to get some byproduct rare earth elements. This is a project where in a carbonatite, there's a high enough concentration of rare earths that you can actually just basically create a mine solely around rare earth elements. And so that was a big discovery that we announced in 2025. And even the bigger part about that discovery and one of the nuances of rare earth elements in general is that the ore mineral at this Lemhi Pass project, and actually at all three of our projects in Idaho, is a mineral called monazite. And so the reason that the ore mineral is so important when you're looking at a rare earth element project is there are certain ore minerals that cannot be processed today. And so even the Chinese, who have been working on rare earth elements for the past 40, 50 years, trying to find a way to process some of the other ore minerals like eudialyte and allanite, they've been unsuccessful. And so if the Chinese haven't figured it out by now, the US certainly isn't going to figure it out in time to fix any of our problems. And so you really want an ore mineral like bastnasite or monazite that's phosphate-based that has a known processing method. So that's one of the things that a lot of investors don't key into when they're looking at the rare earth industry. But that's one of the things that really makes these Idaho projects stand out quite a bit. And so the images on the screen are an overview of the Idaho side of our Lemhi Pass project. And this top image is soil sample grid. So in 2025, we had about 6 guys on the ground doing soil samples. So what that means is every 50 meters, they dug a 6-inch hole, took a bag of soil. Then we sent that soil to a lab in Canada, and they were looking for trace rare earth elements in soils. And so when you get the soil grid, like you can see across our entire project, you can start to pick out areas with anomalously high values of rare earth elements. And then what we've done also is as our guys were taking soil samples, they were also walking around with a radiometric survey tool, which is basically a modern day Geiger counter measuring the radioactivity. So really measuring the amount of thorium in the ground. And so what we're doing now is you look at, okay, where do we have areas with high radioactivity? Where do we have areas with anomalously high soil sampling? And then those are areas where we would typically drill target, so test with drilling. And at Lemhi Pass, we've outlined 5 areas, 5 prospects for drill targeting. And right before winter this year, we're actually doing our first phase drill test on this Lucky Horseshoe prospect and this Intrust prospect. So areas where we've seen high rare earth elements and soil anomalies with also equally high radiometrics data. We'll move on. Mineral Hill is kind of our company's, I'd say, second favorite if I had to rate them as far as rare earth projects go. Mineral Hill is at the far north end of the rare earth element belt. And the approach we've taken to Mineral Hill is a little different than Lemhi Pass. Rather than doing soil sampling and radiometrics, we've actually done this survey here and here are 2 different kinds of magnetic surveys. And so basically what we're doing is we're flying our claim map drone that's measuring the amount of magnetics underground and at the surface. And so this map at the top is measuring total magnetic. We've outlined here each of our prospects that are known at Mineral Hill. So we've got Lower Leebuck, Roberts, and Cardinal. All of these areas have extremely high grade rare earth elements outcropping at the surface, basically, meaning there's kind of evidence for something larger at depth, and you see that as pressure builds underground, it squeezes up to the surface, and you'll see like these 1 foot wide seams of rare earth elements basically coming out from below. And those are areas where you go sample, send it off to a lab, measure the amount of rare earths there, and then ultimately plan again drilling to figure out what's deeper underground. So Mineral Hill has 3 identified carbonatites. The magnetics data shows us that there's likelihood that there's another carbonatite here and another one here, just because the readings that we're getting, comparing them to our known areas, are very similar. So Mineral Hill is one that we're extremely excited about as well. And then Diamond Creek. Diamond Creek is probably our least favorite of the 3, to be blunt, but it's still, compared to many other rare earth prospects out there, it's still a very good one. And so Diamond Creek was actually the one that we initially staked first, just because it had the most historic data. It was the easiest to permit drill programs on because it's close to salmon, good road access, etc. And the drilling came back in 2022. It was good, but it wasn't amazing. And so that's when we shifted our focus to Lemhi Pass, Mineral Hill, where we've actually discovered significantly higher grade rare earth elements. But Diamond Creek will continue to be advanced along with the rest of the rare earth belt. But this will really show you why we're so excited about specifically our Lemhi Pass area. And again, it's sort of like the rare earth ore mineral. I talked about monazite versus some of the others and how you can process some and not others. The other nuance to rare earth elements that's extremely important is what is your ratio. And so what I mean by that is when people say rare earth elements, they're really referring to 17 elements. It's not just a single thing. And out of those 17 elements, really only 8 have economic value and have uses for things like electric vehicles and Virginia-class submarines, etc., that we need, that are critical to our industry. And so what we've done is we'll take a sample from Lemhi Pass and we'll compare that. We've also done it with samples from Mineral Hill and Diamond Creek as well. But we compare those ratios of what our high value rare earths are. So in this case, our magnet rare earths. So you have neodymium, praseodymium, dysprosium, and terbium. These are the rare earths that are used to make rare earth permanent magnets for things like electric vehicles, F-35 fighter jets. It basically takes electricity and turns it into motion. So anytime that you have a drivetrain in an electric vehicle, you're going to have a permanent magnet that actually makes that car function. And so when you look at Lemhi Pass and samples from Lemhi Pass, you'll see that 35 to 68% of the total rare earth elements in that sample are made up of these high value magnet rare earth elements, the neodymium, praseodymium, dysprosium, and terbium. And when you take that and you compare it to the 3 world-class rare earth element mines in operation today, Mount Weld in Australia, Bayan-Obo in China, Mountain Pass in California, you'll see Lemhi Pass stands out with considerably higher distribution of magnet rare earths to the total rare earths. And so at Mount Weld in Australia, their ore has about 19% magnet rare earth elements. Bayan-Obo in China, about 25%. Mountain Pass in California, about 16%. And you'll see Diamond Creek as well has about 35% magnet rare earths. Mineral Hill, more in that 15% range. SEG, it's 3 other rare earth elements that are also critical, samarium, europium, and gadolinium. And so SEG is another saleable product. When you separate your rare earth elements during the processing, these 3 typically come together. So even though you really just want the samarium, you end up with all 3. And so again, we measured our samples here in Idaho from Lemhi Pass, Diamond Creek, and Mineral Hill, and we compare those to the SEG ratios of Mount Weld, Bayan-Obo, and Mountain Pass. And you can see Lemhi Pass has SEG ratios of 10 to 15%, Diamond Creek 9, Mineral Hill 1.1. Compare that to Mount Weld in Australia at 3.2, Bayan-Obo at 1.7, and Mountain Pass in California at 1%. So again, Lemhi Pass really stands out, not only for having high-grade rare earths, but having a high or a valuable rare earth element ratio. And so also at Lemhi Pass, thorium is abundant there. It's not technically a rare earth element, but thorium is something that our company is very excited about. it is radioactive. And so in the past, thorium has kind of been a detriment to a lot of rare earth element projects, because whenever you're trying to mine your rare earth elements, you have to figure out, what do I do with the radioactive thorium waste product? Well, we believe that we've solved that problem. We've teamed up with a company called Clean Core Thorium Energy out of Chicago. They've developed a nuclear fuel that's based around using thorium. It's a mix of high assay, low enriched uranium. And they've developed this fuel for use in existing pressurized heavy water reactors. And so Clean Core has been working with us and Idaho National Labs to advance this fuel. And our long-term vision is, if you had a rare earth element mine in central Idaho, instead of having to worry about what do I do with the thorium, radioactive thorium waste, we'll send that thorium waste to Clean Core. We'll actually make money on the waste, and Clean Core can use it to create their nuclear fuel, which will again enhance the U.S.'s low carbon energy production. So some of the domestic partners that we work with on the rare earth element side of the business, we're really tied in with Idaho National Lab. The way that we utilize the lab is almost like a pseudo lobbyist firm, because Idaho National Lab, they work a lot with the DoD and the DOE, or I guess the DOW now. And we're not a large enough company to spend a bunch of money in Washington, D.C. for lobbyists. So we align ourselves with the lab. We do a lot of government funded project level work with them. And that's all typically to advance the processing technology for rare earth elements, and specifically our rare earth element ore in Idaho. And we do stuff similar with Ames National Lab in Sandia, but not nearly to the extent that we work with INL. Again, I touched on it. This is our We Live Here. It's kind of our approach to ESG. The one aspect of this that I didn't touch on is that part of the thing that got the U.S. in this critical minerals issue is that we were so content to basically offshore this critical industry to other places. And the excuse at the time, a lot of it had to do with the environmental side. They basically said, "not in my backyard," became a big talking point. And it was really just, let's not mine it here. What they didn't realize at the time was, by saying no to mining in their backyard or in America, they didn't actually stop the mining from occurring. They just shifted that mining to places like China, Malaysia, Africa, where they don't have as stringent environmental or humanitarian laws for that matter. And so we actually just offshored and enhanced the amount of pollution and humanitarian issues overseas when we did say no to it here in America. So our approach with We Live Here is like, look, we live here. We know that this has to be mined, and so we might as well mine it here in America, where we have those strict laws to make sure that it's done correctly. So I'll end on that. This is just a photo of our corporate headquarters in Coeur d'Alene. If any of you guys are in town, feel free to stop in. We're right downtown on the corner of 3rd and Lakeside.
Awesome. Well, yeah. Thanks a lot for that, Travis. That was really insightful, and you did a great job of kind of giving us the overview, and pretty cool thinking about the opportunities that you have, and a lot of those gold and rare earth mines that you still have to develop there. So let's open it up to any questions. Anyone want to jump up and be the first one to ask a question?
We have a question. There we go. Can you hear us now? All right, do we sound fine now?
Yeah, you're good.
Yep.
All right, first off, thank you, Travis. Really appreciate the presentation. We were curious on if there's any type of hedging that you guys do for gold, or even maybe like inputs such as oil.
We don't hedge any inputs. You will from time to time see us hedge our gold production, but really the only aspect that we'll hedge is when we produce gold at the New Jersey mill, we produce again that 2-ton super sack of gold concentrate. We get paid for 90% of the gold that's in that bag on site when we produce it. We don't get paid the remaining 10% until about 90 days later when it gets to South Korea. And so if we do any hedging, it'll just be to lock in a price for that 10% that doesn't get kind of doesn't come back to us until 90 days down the road. So that's all the hedging that we do. We're actually currently completely unhedged. I believe we used up the last of our hedge in the third quarter. So right now, completely unhedged.
Awesome, thank you.
Yep. And I'll add something just that I forgot to mention during the presentation is one of the things with having that Murray mill on site, the new mill that we're building, is it'll allow us to essentially double our production by 2027. And the reason for that is the New Jersey mill that we're shipping our ore to, that tailings facility that I talked about with that innovative paste tailings, is actually filling up. And so we only have about 2 years of capacity left in that mill tailings facility. And so by moving to a new mill up on site, we'll have a fresh tailings facility with about 10 years of capacity, and that'll allow us to mine more tons and produce more ounces. So currently at the Golden Chest mine, we only run a day shift. We don't run a night shift. And so the easiest way to think about it is essentially adding a night shift doubles production because you're basically doubling the output that you do during the day.
Josh, I might shoot a question to you. So for like the rare earths, you didn't kind of go over the cost to kind of create that. How does the cost of you kind of mining that, developing that compare to, let's say, China or Australia? And is that something that you guys will have like some maybe government contracts for subsidizing that price, or what does that kind of look like?
For our project specifically, we're not advanced enough in the exploration to know what our mining method would be to be able to estimate our costs, because costs vary significantly whether it's an open pit mine or an underground mine scenario. And so we haven't done enough exploration to know exactly how large the resource is and how to design the mine around it. The one thing I'll say is that no project in the United States or in the West for that matter is actually going to outcompete China on price if you're looking purely at what the cost to produce it is. And the US government finally recognized that point when they put in a price floor for MP Materials. MP Materials operates the Mountain Pass mine in California. It's the only domestic rare earth element producer that we have. It's actually the only North American rare earth element producer. But the U.S. government implemented a $110 per kilogram price floor for their neodymium praseodymium output. And interestingly, the rare earth element market, the price for, they call it NdPr for short, the price for NdPr has only exceeded 3 times in history. And so that just shows you what we had to set as a price floor to make our domestic production economic is a number that has only been reached 3 times in history. The reason that we won't ever be able to outcompete China purely on a cost basis is that Bayan Obo mine that I mentioned is in Inner Mongolia, and Bayan Obo is actually an iron mine. They get the rare earth elements as a byproduct, and so they're able to, as long as their iron mine is profitable, in which the Chinese subsidize it anyway, but as long as they can produce the iron profitably, they get the rare earth elements for free. And that's a reason why the rare earth elements industry in the US is so infant, is because all the larger companies, the Rio Tintos of the world, the big mining companies, never dared to enter the rare earth element market because they knew they're never going to compete from a cost standpoint with China. And so the only time it made sense was recently when the US government recognized this issue and actually started to subsidize the industry. So it will take subsidies. Right now, MP Materials is the only company that has that price floor from the US government. But what it's done is it has given private capital a lot of comfort to begin investing in the space, because I think it's kind of expected that if there is another rare earth element discovery in the US, that a similar type of deal may come to that company's way. And
I had another question as well.
go for it.
We were curious if you have any budgets for these different exploration sites.
We definitely do. We always start out with a budget, but we always budget our drill programs. We call it success based, and so you always start out with a project. Usually for a first phase drill program, we budget about $500,000, and we'll either cut it pretty quick or we'll increase it pretty quick, and that's based on the first couple holes you get in the ground. If your geological hypothesis that you went into the program with is playing out, then you're likely to expand that from $500,000 to, $700,000. If you're still having success, it may go to $1 million. But conversely, if you drill, first 2, 3 holes and your geologic hypothesis isn't playing out, then you might just scrap the rest of the program and move on. So usually first phase is about $500,000. Phase 2 program will be about $1 million, but it's always success based, and we'll get board approval based on one number and go back to them 2 weeks later saying, well, look what we found. We decided to triple it. And that's kind of how the company runs. That's the flexibility we have, being able to invest out of cash flow. Whereas if you go raise that money in the market from shareholders, you have to come up with your use of proceeds and you kind of have to stick to it. For us, we have a lot of flexibility in that we actually make our own money to do these programs.
Awesome. Thank you so much.
Yeah. I know it probably didn't help with any modeling you're going to do, but that's kind of how the company does it.
When you guys are kind of just sitting around as the board and kind of planning for long term, what are like the major risks that you guys kind of think of, and how do you kind of manage those?
I guess I could speak to it from my perspective, and my role is my biggest risk is managing expectations. So certainly try not to overpromise, underdeliver. I think our company is known for underpromising and over-delivering on what we say. But certainly with kind of all of the excitement around rare earth elements, that's become extremely challenging, especially because you see companies that don't necessarily have, say, a high ethical standard, where they're out there, say they know that their rare earth element project is allanite-based ore mineral, right? And they know that there is no way on the planet Earth to process that mineral that we know of yet. They're still out there taking shareholder money, drilling holes, proving out a project where they're ultimately not ever solving a problem, because those rare earths won't be processed. They won't help us in any way. And so there are shareholders that will call up and say, well, why aren't you doing what company X, Y, and Z are doing? Because they may have gotten a little bit of government support here and there, or things like that. And for me, I always tell people results are going to matter. And at some point, solving these issues that we've identified will matter. And so there will become a time when the companies who actually have viable projects, or viable exploration stage projects even, will kind of separate themselves from the rest. And that'll come with education, by Wall Street, by academia, just to learn kind of the nuances of the industry. And so from my point of view, that's the biggest risk, is just managing expectations and really just being patient, that at the end of the day, results are going to matter. And that's what we're focused on. There's always environmental risks and things like that as far as an operation goes, but our mine engineers do things by the book, and then beyond that. So I don't think any of us lose sleep over any environmental issue. at any of our sites. The presentation that I shared is also uploaded on our website. A lot of info on our website that you guys can look through. The one thing I will say is our Murray Gold Belt page of the website, that 20,000 acres that we control up there where the Golden Chest Mine is, that new acquisition we did from Hecla for the northern half of that district has not been put on our website yet. And that's really a function of we're still sifting through all the data that we acquired from Hecla when we acquired the property. Hecla actually did a lot of work that they didn't talk about publicly on that land, a lot of work that we're excited about. So I will likely have a press release out on it in the next few months. But until that time, the company will probably be pretty quiet as far as what we say publicly about it. But we are extremely excited about it. There is a small resource already on one of those prospects that looks like a really good target for us to build another mine at. So it's still exploration stage, but just as you're looking through the website, just note that that area probably won't be talked about for another few months.
And then how about like merger and acquisition? Have there been kind of targets for you guys or larger companies looking to kind of acquire you over the last couple of years, or kind of anything in the works, or anything to share there would be awesome.
Yeah, M&A is something that we've started to look at. We haven't really been in the position to seriously take a look at anything until, say, 2024, 2025. We've got a strong balance sheet. We've got a good share price. If you're using equity for a deal, the thing that we run into is, what we like is a domestic, tends to be our companies that we look at are on the gold side of things. So a small domestic producer, and there just really aren't many. The U.S. has underinvested in any mining domestically for so long that there just aren't a lot of targets out there that get us excited, to be blunt about it. We do kick the can on probably one or two ideas every 6 months. Even get to the stage where we may be engaging with the other team's management, or the other company's management. But nothing yet that we've seen that we like enough to spend shareholder money on. A lot of it, you're kind of weighing opportunity costs. Do I, pay for something that they have, or do I put more money into organic exploration where, I think we probably have another 2 or 3 mines in the Murray Gold Belt that we need to discover. So at times it's organic growth isn't always the sexiest story on Wall Street. But for us, I think it's probably the best use to shareholder capital for now. With one analyst, I guess I'll just if any of you guys want to call Mike Nieheiser, he's our analyst at Roth Capital. He covers the company. I can get you his contact info, or you could probably find it online. But Mike will talk your ear off. He's a big fan of the company. He can tell the story just as good as any of us. But if any of you guys want to go that route, Mike's a good guy, and he would absolutely talk to you guys. I will say too, or maybe I won't say. Actually, I'll just wait and see who dives into the 10K enough to understand our full relationship with Roth Capital. So I guess I'll just leave it at that. But yeah, feel free to reach out to Mike if you guys want.
We got a lot of students here, and they're kind of getting into equity analysis. I think always a fun question sometimes, and I'll probably put you on the spot a little bit, but when you're having your earnings calls or shareholders calls, what are some of the toughest questions that you get that you have to answer?
Well, I guess I'll just be completely honest. The toughest question to answer for me is why did management sell shares this year? That's a question that there really isn't a good answer. I think the philosophy that I've always taken as an investor myself is, management teams can sell shares for any reason. Maybe they're trying to send a kid through college. Maybe they're, trying to pay off debt that they took on while they were building the company. That was actually the case for our management team. Those guys kind of leveraged their personal lives in order to fund a conservative balance sheet for the company's sake. And so they did sell some shares this year to pay off, the lake property that they bought that they actually had a mortgage on so that they could invest in the company and things like that. Um, but management only buys stock for one reason, and that's because they think it's undervalued and the price is going to go up. And so I just keep in mind that, you know, during your research, that could be something that comes up, management selling stock, but you sell stock for a number of reasons. You only buy for one reason. That's probably the hardest question that I get to answer because no matter what you say, no investor on the other end of the line likes to hear it, to be honest. Um, let's see, I guess operationally specific, why don't you move faster? That's one that we get quite often. Um, again, it's really just one of those things where organic growth isn't a sexy story to tell. And in our industry, you get a lot of good stories that result in nothing. Companies that go in to say they've got a 1 million ounce resource and a lot of existing infrastructure on site. The mine shut down in 2013 because of low gold prices, and they make it sound like all they have to do is go, like rehab the mill with $10 million and they're in production and they're profitable and everything's good. Those stories almost never play out that way. Those mines ended up shutting down for a reason. And so even though the story of organic growth and grassroots greenfields exploration is not a great one to tell or an exciting one for investors to hear, in my opinion and in the opinion of our company, there's actually a lot more potential that way than just going into something that's kind of already been played out. So that's kind of one of the things we explain a lot. The other ones are on the rare earth element side, just investors still kind of learning the nuances to the industry, learning that different ore host minerals matter, monazite versus allanite, bastnasite versus eudialyte, um, learning that all rare earths aren't created equal. You really want your neodymium, your praseodymium, and your heavy rare earths. You could care less about cerium and lanthanum, even though they're really good for juicing your numbers. Economically, they're actually more of a cost than they are a benefit. Um, that's probably a lot of the kind of the harder questions that we get.
Well, I think I'm out of questions, so we'll leave it open for another 15, 20 seconds to any other students have questions. Good. Well, yeah, Travis, again, thank you very much for that great presentation and just being very candid in a lot of your Q&A. I think that will help the students a lot. For the students, you have 2 weeks if you want to shoot over any of those kind of additional questions after you kind of dig into the numbers. Send those my way, and I'll pass them along to Travis.
Yeah, no, thanks for having me. Feel free to reach out. Our CEO has done a couple of podcasts. The Value Hive podcast, he's been on a couple times. He was on the Business Breakdowns YouTube channel for Microcap Club. Trying to think of additional resources. Those are probably the two best, the podcast and the YouTube video. And then I've probably done a few presentations that you can find out there on YouTube as well. So just Google the company, Google my name, Google his name, something will pop up. But I'll leave that to you guys. Thanks for having me.
Awesome. Well, yeah, we'll end it there. Thanks again, Travis. And yeah, students, if you have any questions about the competition or anything else, shoot them my way and we'll get those answered for you. Thanks, everybody. Have a great night.
Have a good one.
Thank you, Travis.
Thank you.